Good morning, everybody. This is Michael Ovitt with MoneyStream Financial. We're driving to an appointment, but I wanted to take a minute and share just a quick overview of the infinite banking system and what exactly it is. Just in a very brief, simple explanation. So, IBC, or the infinite banking concept, was created in a book by a gentleman named Nelson Nash. The concept has actually been around for potentially centuries, but Nelson Nash kind of captured it, encapsulated it, and popularized the concept. It's called Your Family Bank. It's called Infinite Banking Concept. It's called Insurance Benefit Concept. And essentially what it is, in a very simplistic system here, is IBC seeks to reverse the flow of interest. So the average American is paying out up to 35% of their monthly or annual income in interest, whether that's mortgage interest, car loans, whether that's credit card payments, you name it. They're paying out about 35%. They're saving about 5%. So we put about 5% into our savings, into our brokerages accounts and things like that. And that's what we focus on. We pay a financial planner to make sure that our brokerage account is getting the very best return, and we're bleeding off interest. Now, some people will tell me, hey, listen, I don't pay interest on a whole lot of things. I like to pay cash. I would argue that those things that you're paying cash for, there's a cost. It's a hidden cost. It's called opportunity cost. So in other words, if I buy a car for $30,000, I don't have that $30,000 now earning income, earning a return in my portfolio. That $30,000 is gone and I'm driving it. So IBC simply uses a specific instrument, and that instrument is a properly structured dividend-paying life insurance policy through a mutual company. That properly structured policy is designed for cash flow accumulation. And what that means is that cash flow accumulation will give us a faster ability to accumulate money or cash flow in our IBC policy than a normal life insurance policy. So a normal life insurance policy is structured for what? Death benefit. Meaning the majority of the premium is going towards death benefit. Whole life insurance policies have a two-part premium. One part of the premium is going towards death benefit. The other part of the premium is going toward cash value accumulation. So very simply, instead of solving the problem for the maximum amount of death benefit with the lowest premium, what we actually do is sort of reverse engineer the policy. And what we're doing is we're taking a budget, doing financial advisory work, and restructuring the finances to allow mass accumulation of cash value in this dividend-paying life insurance policy. So if somebody's paying $1,000 a month, just as an example, right? $1,000 a month between their car payment, their credit card payments, their furniture payment, whatever it is. We chunk that into pieces and redirect some of that money into this whole life policy, and then borrow against the cash value and start consuming that debt. And what we're doing is we're redirecting that $1,000 from going to be paid to outside agencies to being paid into our banking policy. Further, we can then borrow against that banking policy and accumulate additional cash value. Now, how is it different from a regular banking policy, a regular bank account? Well, very simple. My cash value accumulation continues to earn interest even when I've borrowed against it. Because if I've got $20,000 in a Wells Fargo bank account and I take $20,000 and I use it to buy something, that money's gone. It's been spent. if I take $20,000 out of my cash value, the cash value stays. The $20,000 I'm getting is actually policy loan secured by the death benefit, and it's a guaranteed policy loan. There's no possibility that I can't get it. It's just my money. But there's still $20,000 growing return on the investment in my policy. It's just secured by the death benefit. So it's a very low cost loan, and when I pay myself back, the interest that I'm paying goes back into my cash value accumulation. So I'm redirecting that interest back to myself. So in a very simple nutshell, 5 minutes, that's the concept of infinite banking. The general idea is to reverse the flow of interest from outside agencies back into an entity that we control. So thank you so much for joining us this morning. Hope you're having a wonderful day, and I do look forward to your questions. Visit us at www.moneystreamfinancial.com or call 407-732-0110.